Welcome to the Forex Form Guide. Tonight we're looking at the Australian dollar, US dollar. The crash countdown has begun. I'll give you a tip from an old top that's going to serve you very, very well during the crash and during any other crash that you might be trading. Then we'll take a look at potential strength on the pound US dollar before we go through a tight price forecast on the euro US dollar, and we look at a potential breakout looming on the US dollar Japanese yen. So plenty to talk about both from a trading and a forecasting perspective, and we'll finish off with the economic calendar. I'm Aussie Dollarman. Welcome to the channel. If you're new here, there's a playlist at the top of the channel that will help you get up to speed very, very quickly. And if you do find value in this or any of my videos, I'd really appreciate it if you could click on the like button and leave a comment. It does help me to push Gann's teachings out to more people. And if you're interested in trading market crashes, there's a big one just around the corner, and I'll be doing plenty of preparation work and some commentary on that crash as it approaches. So you might like to hit the subscribe button to stay up to date with my future videos. Going to be a very, very interesting August, and hopefully a very, very interesting September too. Before we get going, a quick disclaimer: this video is for educational and informational purposes only. Bottom line there, do your own research. This is not financial advice, and as always, trade responsibly, always use stop losses. So let's kick it off with the Australian dollar, US dollar. All year I've been harping on about the month of September for a crash on the Australian dollar, US dollar. We're going to take a look at the position of the market in a moment. Now, if you're new to the channel, you may not be familiar. This is page 46 of Gann's book, The Wall Street Stock Selector. You'll see here that Gann was looking at his charts side by side, and that's exactly what I do every week in my analysis. And it's even more important when you're looking at a potential upcoming crash. You're not just going to trade it off one chart and work out what's happening just from one chart. You need that multiple time frame perspective. And if you haven't watched it yet, I did talk about this in great detail in my recent video, Gann's Gold Part 2, Wheels Within Wheels. So let's take a look at the Australian dollar. Last week we ran down quite heavily. No surprise that we've had a pullback this week. Generally speaking, as I said last week, when you see a big run down like this and it cleans out some lows here, it's a big expanding range down. Your natural inclination is to think you're going to get a pullback into a lower top and then have a short trade out of there. However, this has not been an easy year on the Australian dollar, and we're still arguably in a sideways period, and we have been all year. Particularly, I mean, if you ignore this spike down and spike up in April, it's been sideways all year. We're still looking sideways there. So yes, it looked over here as if we might break out to the upside. We didn't. Then it looked like we might break to the downside. We didn't. Looked like we might break to the upside. We didn't. Looked like we were going to break to the downside. We haven't yet. We still may do so. I think that we're going up. Bottom line, if you're new to the channel, I've been watching the end of August, early September period for the yearly top, and I've been watching that since last year. You can even go back to the first videos on the channel. I did mention that a long, long time ago. So I don't think it's time for this market to start heading down yet. It may head down, and this late August, early September date that I'm watching may end up just being a lower top. So you can run down, run up into a lower top, and then that lower top comes in your early September period, and then you've got the month of down movement. That's all fine too. I can live with that as a trader. But for now, I do think that this is going up. And one thing that we can do there is we can take a look at the swing charts. This is your daily swing chart. So clean swings up, down, like that. By the way, this is in Profit Source software by Hub Financial Group, HUBB.com. You can find that. This is using the Safety in the Market module, which is fantastic if you're a swing trader and you want swing trading tools. I believe they're slowly building things like this into TradingView if you use TradingView. However, I don't like what's there currently. It's not complete. That's why I keep referring to Profit Source for my swing trading. But looking at that, a rundown and then a failed rundown there, so a higher bottom there on the daily chart, often that's the end of that move down there. So we're now into the next run up here. Although if you flick across to a 2-day swing chart, as you can see here, we're still potentially shaping up for a lower top on the 2-day swing chart. So for that swing chart to turn down, you would need 2 down days. We'll come back to this in a moment when we look at some ranges and some targets for this. As I said, though, I am leaning towards it going up. We're hitting some resistance at the moment. This is one of my favorite techniques. This is the Gann angle tool in TradingView. It's not actually a Gann angle as Gann described them in his various courses, but you can see there's a rundown there. It's more of a pitch angle. There's the pitch of the run down there, and then this blue line here represents half that pitch, and then a third of that pitch, a quarter of that pitch, and you can see looking at a quarter of that pitch there, 1, 2, 3 tops all at that level. It's not going down though. It wouldn't surprise me to see this run up on Monday, Tuesday. However, the real key on any market is that 1/8 line there, that 1/8 pitch. When a market breaks there, it usually takes out the top or if you're running it from a low, it usually takes out the low. I think we'll approach that on Monday or Tuesday, and then we'll just see what happens when the market gets there, see what sort of a signal that we get. But this is not a technique that I would use in isolation. Something that's crucial to my trading and that I always have on my charts and that I'm always paying attention to across all of my different chart timeframes are sections of the market. So far, coming up out of this low, we had a run up of 75 ticks. There wasn't much to that. That was only a couple of hours up. 75 ticks, pullback of 55. Second section up, I'm marking as this run up here. Different people will interpret that in different ways. It's obviously easier once the move is over to go back and see what happened. This is how I'm calling it at the moment. 75 ticks, 92 ticks, which is about 123% of the last range up there. Then only 51 ticks down here, so a slightly smaller range there. So expanding ranges up, contracting ranges down. Again, I'm seeing strength there. I'm seeing an uptrend. On this smaller picture chart here, it wouldn't surprise me to see this market continue to the upside. Now, once you've had two sections and the market's showing some strength, it wouldn't be a surprise to see a third section come in, maybe even a fourth section. But if you look for a third section, you've got this 92 ticks here. You could look at adding those 92 ticks from the pullback low here. And as you can see on this chart there, that would bring you to about 65.77, which is about a 75% retracement. Now, remember I said that 1/8 line, once the market breaks above there, it almost always, on the Australian dollar that I follow, it almost always will go back and break out that top there. So I see that as a bit of a point of no return, where if the market goes through there, it's probably not going to fall back below that. It's going to keep going on there. So if you're in a trade, that's not a bad place to put your stop loss at. You might not put it right on that line. You might get a tiny false break there, but a clean break through there and bang, you almost always go through that top. So that's the 1/8. Another point of no return that I watch is this 75% milestone. And you can see we're very close to that now. In fact, we had the pullback here to sit on the 37.5% milestone. Gann says tops and bottoms become halfway points. Well, from that low up to the 37.5% milestone, where we sat there with a little higher bottom, that's a halfway point to the 75% milestone, and we would hit that early Tuesday morning on the 12th of August. So that is an area that I'm watching closely, and that's going to tell us if we're going higher or if we're going to pull back, and if the crash in September is going to be from an extreme high or from a lower top. Now note that down in the 65.70s there. If we go back to our 2-day swing chart from before, you can see, and again, this is one reason that I love Profit Source software. It automatically calculates the ranges for you on whatever swing chart time frame you choose. Look at these ranges. You've got 106 points down, 111 points up, 142 down, so an expanding range down, 171 points up, that's expanding, 207 points down, that's expanding. Now we see what happens here. If we run a smaller range, an equal or smaller range to that, well, it could be a lower top setup on the 2-day swing chart. So if we go back to that previous slide, you can see this area in the 65.70s there. If we were to stop there, well, our 2-day swing chart is going to be sitting somewhere here, and that's all of a sudden an expanding down range and a contracting up range there. So if you are looking for a lower top trade, well, that would lend some evidence to support that as a potential first lower top trade. Now, on the monthly chart here, the bar for August has actually taken out the low of July. So that would be one reason to expect the market to fall down. However, given my cycle work, and we're talking a bigger picture law of vibration cycle here, so I'm expecting this market to fall and fall heavily in September. Given that, it may be a fraction early there. You might like to cast your mind back to, say, July 2014. The market made a top in July 2014, and then it went sideways until September, and then it just collapsed from there. So Gann said when time is up, the price must go, but that time is more important than price. So that's what I'm paying attention to here. If I miss the extreme top, no big deal. You can see on the weekly chart there, we're sitting on that 50% milestone there. If we break below that, well, it's almost certainly going to be a lower top for the late August, early September top that we're looking at there. A couple of prices to watch here. Obviously from this run down here, the 75% milestone, 66.84 is not a bad place. If we do get the early September top in there, that would be a great place to watch. The alternative there would be underneath this old 50% milestone, 67.56. I'd be happy with either of those, but at the end of the day, Gann taught form reading and he taught forecasting. Forecasting is where you come up with dates and prices to watch, and then form reading is when you use your bar charts and your swing charts and your market signals to take trades at the time or the price that you are forecasting. We're still about 3 weeks away, so we've still got time there. As we get closer and closer, we should be able to pinpoint exact points in time. These are the ones that I like at the moment. If it goes a bit further, so be it. We'll watch for that. And again, if it breaks below that 50%, well, I'm going to be looking for a lower top there in September. I don't think that's going to do that, but you always got to be prepared for that scenario. Interesting on the daily chart here, as I said, we've got that higher bottom and an expanding range up there. So at the very least, I would expect another leg up there on that chart. If we have a little bit of a pullback, well, that's going to be into a second higher bottom. Gann says that that second higher bottom is actually stronger than triple bottom. So if and when we do get a higher bottom there, I'd be looking for that market to run up and run strongly into that early September date. Over here, you have seen the run up there. This is a little bit tricky here because on the daily chart, that's the daily top up there. But the pullback on the daily low is this one over here, which is really, it's just a higher bottom than this one over here. So you'd be thinking that's the low that you'd be projecting from there. So which one do you use? There's a lot more harmony around this one over here. That's why I ran the trend line from there. And that's been backed up by when the market had its second section pullback. It's pulled back to that trend line again there. So we may already have our two higher bottoms in place there, and this market might be ready to pop to the upside. It'll be very, very interesting. As you'll see later, we've got a fair bit of economic data coming out for the Australian dollar this week, but we'll get to that a little bit later in the presentation. So my verdict for the Aussie dollar, US dollar for this month, my focus is on the end of August. As we get closer to the end of August, things will start getting clearer. They almost always do around those turning points in the market, so I'll be building towards that. I think we're going to go up until then. I think I made that pretty clear. But as a trader, you've got to be prepared for all possible scenarios. So if it does go down, I'll rejig my plan and I'll look for opportunities to go short when the time comes there. Now, my next target date for a swing top is Tuesday, the 12th of August. That's coming up in a couple of days' time. And then a low on Monday, the 18th of August. From there, I'll be watching the end of August closely, looking for the market to run up there and looking for signs. There are always signs when a top is coming in. You've got obviously your timing techniques that you can use. Around tops and bottoms though, the form reading work of Gann's really comes into its own. Sometimes you'll apply Gann's form reading to things like ranges, resistance cards, swing ranges, all of that stuff. And it's a little bit hard. You don't see a lot happening. The market blows through the levels that you're watching and there's not a lot going on. Around the big turning points, all of a sudden these price milestones all start lining up and you can get 4, 5, 6, 7 of them all really close together and you can really hone in on a price target that will probably give you that top or a bottom in the market if you're looking for a bottom. I've sown some seeds for that in my WD Gann's Gold and Where to Find It series, which I've just started. The next one coming up is a really, really crucial one, which is the form reading one. So if you're not subscribed to the channel, make sure that you subscribe and don't miss out on that one because there's going to be plenty of good stuff in there. Now, I do get questions from time to time about these cycles. They come from Gann's novel, The Tunnel Through the Air, and you can find an audiobook of that on this channel if you wish to go through and start some work on that. It's going to take you a lot of time, so don't expect that it's just going to happen overnight. Obviously, it's nearly a 12-hour book, so there's plenty to listen to there. It's 418 pages if you have the original version of it. So it's a chunky novel. Go through it, look for where Gann is repeating things. That will give you a clue as to some things that Gann is trying to point you towards. But there are so many layers of that, and they'll reveal themselves when you're ready to receive them. Now, at the start, I did promise a tip from an old top, and here it is. It's going to sound pretty simple, but I'm going to walk you through it on an example from an old top, just to give you an idea of some of the pitfalls that you might experience and how to navigate those, and most importantly, how to trade with safety as you approach a potential major crash in the market. But here's a tip for you. Don't just go all in at any stage. In my experience, focus on the small risk trade. You may get it at the extreme top. So we get to late August, early September, the top is there, bang, you get that low risk trade. Great, you're in and you're all set. But don't just try and jump into the market because you say, oh, it's going down now. There is almost always an opportunity to plunge. That's what Jesse Livermore used to call it, plunging. It's almost always an opportunity to plunge later on. If you're going down all month, there are going to be pullbacks to the upside. And one of those pullbacks almost certainly will give you a small risk entry trade that you can take and then have a good run on. If you want a good reward to risk ratio, don't just jump in. Look for those small risk trades. They're almost always there. You just have to wait for them. Ideally, you'll get the extreme top with a small risk trade and then you'll get some lower tops along the way down to add to your position and you'll have a really good sized position there. Obviously, refer back to the disclaimer. This is not financial advice. But ideally, you'll get multiples, but wait for them. The small risk trade is everything in trading. If you see the market, drop 200 points overnight, and you think, oh, I'm just going to jump in. Well, where do you put your stop loss? In a crash market, the market can be quite volatile and wild, or maybe you miss the top. Maybe the top, you think the top is in, it drops 200 points, and the next day it just gives you a false break and then runs down there, and then you've lost your 200 points of risk there. It's just silly. Wait for the small risk. If you do nothing else, focus on a small risk trade. Now, I want to give you, I said a tip, there's probably more than one tip there, but this was the 2008 top on the US dollar Japanese yen. I had traded the 2007 top. I had done okay out of the 2007 top. I had made some mistakes there as well, and I was late in, early out, that sort of thing as well. But I was really ready for this. This was a nice 50% retracement, by the way. Plus, I think it was a simple 10-year cycle or 20-year cycle. I can't remember now, but you can test that for yourself. Almost to the day, called that top there. Now, I got short at the top. Then the market did this 1, 2, 3, 4 days down, and it just broke that low there. Okay. And at that point, I thought, oh, gee, this thing's really ready to go. And I added an extra position there that I shouldn't have. Okay. Now, the market shot up the next day. There was really strong news there. And with that really strong news, all I heard, I used to watch the news a lot more back then, all I heard was US dollar is going to power up to new heights, blah, 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 blah. But what it did was it just powered up into a lower top. And that in itself was extra confirmation that the top was in here, because that good news couldn't push the market higher. But I had that position there, so my average position was somewhere in here. All of a sudden, I'm at a loss on 2 positions where I really shouldn't have been at a loss there. So I handled that really poorly because I got sucked into you get those few days down, the market gets on a little bit of a roll, as it did over here. Bang, bang, bang. Oh, it's going down, and then it has its pullback there. Markets don't just drop. I mean, there's an example where a market just dropped. But apart from that, markets don't just drop. They will run down into lower tops, down to a lower bottom, up into a lower top, etc. And it's not always clean. Sometimes it'll break that last top and it'll kick you out. And markets have all sorts of tricks up their sleeve, and they can play dirty tricks as well. There's not much that you can do with that. But just be on guard, because your emotions, every time you have that little mini crash, you're going to be thinking, we're in crash territory. Oh, it started, I missed it. And you just want to jump in there. Wait for those pullbacks. Use that wheels within wheels approach that I was talking about there. If you're a safety in the market student, now is the time to revisit your active trader program online training and all your wheels within wheels stuff in there. Get really good at that, but wait for that opportunity. The opportunities come. Now, I shouldn't have taken that trade there. It was a really dumb trade. I was under a lot of pressure for the next week there until the market came back down. Then it shot down here, and then it rallied up strongly there, but I was a lot more comfortable there, and I was just watching and observing the market. I almost added here, but I couldn't. I could have really smashed that top or that double top there, but because I had that position sitting down there, I couldn't for money management reasons. I was already probably extended more than I should be, but I picked up the pattern of the market and I got these double tops here. And then I shorted again at this top and that top over there, and then had one more kick on the way down, and bang, off it went there. The opportunity comes if you're going to compound. The worst thing that you can do, and I did this back in the day when I was starting out, is you just sell, 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 and the market shoots up there and you get margin called out of the trade because you've got too big a position there. And you just ruin all of your hard work, and then you're right on the trade, but you're out of it with a big loss, and it just drives you nuts. But my rule for compounding is that if I compound, stops must be at entry plus commission. So worst case is a break-even trade. Now, break-even trade in a big bearish move like that, where you're expecting it to go down, a break-even trade still hurts because you should be making money and you're not. But at least you're not losing money there. So in a move like that, watch the move, try and get in at the top if you can, maybe the first lower top if you miss that. Once the market's run on a little bit, and by the way, here's another tip, watch the market on an end of day chart for a few days, pick up the pattern and don't get sucked into the intraday stuff. You'll pick up the pattern, as I said, around here. I was making these little lower tops, and I thought the next one's going to come in here, next one's going to come in here, and I figured that out. You can do that with ranges resistance cards from How to Make Profits in Commodities. But at that point, you've now got some profit on the board from your earlier trades, so you can add to your position and then still have a stop loss at a point of break even or better. Or in this case, I was locking in profit there. So I'm not sure we're going to see a huge rundown like this that will go on for months and months and months. All I know is that the month of September, the cycles are pointing down, and there should be plenty of opportunity for short trading through that time there. When I went through the year, at the start of the year, or at the end of last year, that's the period that I identified as the best time to trade the Australian dollar. The April low was always going to be an interesting period to trade as well. We've got that nice big spike trade up there. I spoke about that in another video on the channel, the double bottoms video, but September is where it's at. Now, final tip here. Sometimes you do all of your work and it all comes together beautifully. Sometimes you do all of your work and the market throws you a curveball, or the range isn't all that big, or you get a false break, or something goes wrong there. Don't make this out to be more important than it is. It's just another opportunity. In trading, there are several opportunities each year on each market to make money. This is just one. It happens to be probably the best, but it's just another opportunity. It's just another trade. Don't do anything stupid with it. All right, that's gone a little bit longer than I had intended. I hope you got some value out of that. If you did, you can let me know by clicking the like button below. But let's move on now to the British pound. If we look at the pound, you can see that we've had a very strong run up here on the monthly chart. A little bit of a pullback there, outside bar in July. August, though, we've been rallying up strongly. We did have a repeating range down there into that 37.5% milestone there. If we break that low, I don't think we will, and I'll explain why in a moment, but if we break that low, the target is 127.32. That would be the next target there, but I think that we're going to go higher before we go lower on this market. And one reason for that as well is look at the chart down here. You've had a run down, pullback, and a run down. See, this run down here has failed. Run down, outside bar, turns your swing up, and then a failed run down there. This move up here to meet that trend line there, that's all one daily swing there. And if you look at this on a daily chart here, all these days down here, and then 1, 2, 3, 4, 5 days up there, all one daily swing, we're already back to the 50% milestone there. Now, some people will look at this, some Gann traders, and they'll say, 50%, let's short there. But to me, that's a sign of strength there. It's obviously a big expanding range compared to this one here. It's bigger than this run up here, and it's all one swing. At some point, it's going to pull back and then have another crack to the upside. So at the very least, I would be waiting for that, but it does look like it is showing some strength there. Now, if you're unfamiliar with swing charts and bar charts and ranges resistance cards and Gann's price forecasting and sections and all that kind of stuff, I do highly recommend safetyinthemarket.com.au and their active trader program online training. It'll give you a really solid grounding in swing trading, form reading, and price forecasting. So again, if that's not something that you've mastered, highly recommend this one. There's very few things out there that I recommend outside of pure Gann and going through Gann's courses, but this is one of them. All right, moving on to the Euro US dollar now. I've been talking a little while about this 119 level. So that's the 100% point there on this big move over here, and we're approaching that, and that's all well and good. 119.16. We've had a little bit of a pullback, just 25% there, so nothing to write home about yet, and the market has rallied quite strongly out of there. If we break through that top, we are approaching that 119 level, and I can see a really tight price forecast there at 119.53. Again, safety of the market students, that should be bread and butter for you to put that together. But around that 119.52 level, I consider that a really tight price forecast. I'd be watching the market if and when it approaches that level. I'd be watching the smaller ranges. Remember that wheels within wheels stuff that I spoke about in Gann's Gold Part 2? Well, this is a part of it. Monthly, weekly, daily, 4-hour chart. As you get closer and closer, you'll start to see, if that level's going to work, you'll start to see your smaller ranges like 1 hour and 15 minute and even something like 4 minutes, they'll lock on to that level. And it's fascinating what you can see around market turning points there. Finally, the US dollar, Japanese yen. There are two really important breakout points to watch here. Number one, we've spoken about before, are these triple bottoms here. I think that the market is going to break below there. So obviously you've got the last monthly bar there. When that low gets broken, you've got a lower top on the monthly chart. I expect that to run down, break those lows, and keep going there. The second breakout point, though, is an interesting one. We spoke last week about this milestone here and showed how that could have been called. Market running down, 15 weeks down, 14 weeks up, nicely balanced around the 50% point there. So that's looking good for a short. Look at what happened on the daily chart. You've got a run down there. Little run up, little pullback, little run up there. These things can go either way. Sometimes you can say, well, there's a run down. Now you've got a daily high bottom. We're going to go up from here. But when you're all set up for a bearish move, and I think that it's set up for a bearish move, if you turn around from here and you break that low there, that's going to hammer to the downside. And then it's going to quickly reach that level. The last month's lows, I think, if it breaks there, and it will keep going, and then you've got those triple bottoms there. You could have a pretty decent move there just from one little setup there. I love this setup. I call it the two-pronged pullback. So you've got a run down there. Normally, you've got 2 or 3 days down. You look for 2 or 3 days up, and then look for the market to turn to the downside there. Here, though, it's got a little weak pullback. That's like a first thrust to the upside, a first attempt to the upside, then a run down, and then another attempt at the upside. That's your second run up there. Now, it could kick on and we could keep running up there and go higher and higher, and maybe up here this scenario is wrong that I had, and maybe we are going to that trend line after all. But what I'm saying is if it breaks those lows there, then to me that's a two-pronged pullback that has failed, and that acts as a potential really big breakaway point there. And as I said, you've got that breakaway point, and then the triple bottoms down here, that breakaway point there. I think there's potentially a lot of downside. This thing could hammer down from where it is now. It could go 2,000 or 3,000 points quite easily there as well. Now, something like this, that's about 120 points risk there. But let's say on the 4-hour chart over here, let's say you got a pullback and then a really weak run up there, and you could get an entry on the 4-hour chart there. All of a sudden, you might only get 30, 40 points of risk there, 3,000 points down. There's a pretty juicy reward to risk ratio there if it works. Trouble with trading on the 4-hour chart, though, is that the breakout is not confirmed. You're anticipating the breakout there. Whereas if you enter on the daily chart as the market breaks through that low, well, there you go, breakout. The breakout has already occurred there. And that's one of the things that we weigh up with looking at our smaller picture timeframes. We get these really cool entries, but you are taking on that extra risk because the breakout hasn't happened yet, so you're anticipating it. But one there, and of course the triple bottoms down there as well. Last thing before we wrap up this evening, a fairly chunky week in terms of the economic calendar, particularly on Tuesday. And if you cast your mind back to the Aussie dollar verdict that I gave out, where my next swing top that I'm looking for is Tuesday, the 12th of August. People will say, oh, he's just reading the economic calendar. No, I had that 2 or 3 years ago as my date on the Australian dollar, the Tuesday, the 12th of August. I've been watching that for a long time. It's part of Gann's cycle work. And it just so happens around that point that there'll be the cash rate. Now, if the market makes a top, or any turning point really, but if it makes a top and then runs down from there, what's the press going to say? They're going to come out and say, oh, the market moved because of the cash rate. Now, as a Gann trader, I would respectfully disagree. I would say that the market moved because of the existing cycle that I've tracked back over 30 years on the Australian dollar, and you can track back further and further as much data as you have there. The cycles just keep repeating and repeating and repeating. But at the end of the day, it doesn't really matter why it moved, as long as you're on the right side of it, I suppose. But you've got the Aussie dollar RBA decision coming out, and there is an expectation that they are going to lower rates by 0.25%, and that would normally lower the price a little bit. So it makes sense that that would be a swing top there. Then in the evening on Tuesday, this is Sydney time, of course, you've got US CPI numbers coming out as well. So at the moment, inflation is still a pretty important topic, and it's at the forefront of the market. So any deviation here could cause some moves as well. That could back up what we're seeing over here as well. Wednesday morning, we've got the wage price index as well. And then on the 14th, we've got unemployment figures as well for the Australian dollar, GDP on the pound. But there's a fair bit on the Aussie dollar this week with wages, employment, and the RBA cash rate as well. So pretty interesting week coming up as we approach, of course, that late August period. That's all for this video. Again, if you found some value, really appreciate the like and the comment there. And as I said, we're going to be following this setup, and I'm going to be giving you some more stuff as we get closer and closer to this late August turning point that I'm expecting on this market, which I think will be a yearly top on the Australian dollar, US dollar. So if you want to keep up to date with that, just click on the subscribe button. If you haven't already, if you have subscribed, of course, you only have to do that once. It'll say that you're subscribed already. But if it's showing subscribe, it means you're not subscribed. I welcome you to subscribe and keep up to date with the videos over the next few weeks as we approach what could be the trade of the year on the Australian dollar. Thanks for watching the Forex Form Guide. I aim to get these out at 7 p.m. Sydney time every Sunday. It's going to be an interesting week coming up, and I'm sure that we're going to have a lot to talk about in next week's episode of the Forex Form Guide. So until then, I wish you all the best with your trading. Good luck with whatever you're working on right now, whether that's Gann or something else. But good luck, all the best, and bye for now.